Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange. I'm your host, Remy Blair, and we are coming to you live from the financial capital in the U.S., in New York City. We'll start the hour with the market briefing and live coverage of U.S. markets. For today's market briefing, we have Tai Wong, independent proprietary trader. And in the second half, we'll be joined by Zach Pendle, head of research at Grayscale. Tai, happy Friday. Thank you so much for joining me. What a week it has been.
It's good to be here. It has been a really active week. I think next week's a bit of a barn burner as well, but always glad to be here.
Well, I think we should check in on the markets right now. On this Friday morning, we're seeing the Dow, Nasdaq, S&P 500 all higher by at least 0.5%. The Dow Jones Industrial Average up triple digits, nearly 300 points, or 0.7%. And looking at the Nasdaq Composite Index, it is higher as well this morning, up by 0.6%, seeing a gain of over 100 points. And last but not least, looking at the S&P 500, it is higher as well, up by 0.5%. So, first and foremost, Tai, let's start out with the Fed rate meeting coming up next week from September 17th to the 18th. Now, initially on the heels of this week's economic data, there are expectations of a 25 basis point rate cut, but coming into this morning, we've been hearing different news.
Yeah, I mean, what a sea change. So yesterday during the show, I was checking the odds, and the CME FedWatch tool had 10 or 15% chance of a 50 basis point cut. And then this morning, you look at the bond market, and you're like, why is the bond market up so much? It turns out that in the afternoon yesterday, Nick Timiraos of the Wall Street Journal, who's now sort of considered by the market the favored source. The market thinks he's the Fed whisperer.
Yes.
In that somebody very high in the Fed whispers to Nick that we want to send this message, we want to set certain expectations. So whether that's true or not, it may well be. There have been folks like Nick in previous years who were considered sort of like the guru when they wrote something. People really paid attention, but Nick's that guy now. And his piece yesterday was a relatively long piece, and it quoted a lot of former Fed governors, because if they're in a blackout period, the Fed can't say anything. But if they want to tweak, this is how I guess they would tweak it. This is what the market's thinking. And it was a very, very sort of dovish piece. Almost everybody quoted in it said that there's room for 50 basis points. It should be 50 basis points. And the one that really struck me was that she quoted former Kansas City Fed President Esther George. And if you're sort of a Fed geek like me and you pay attention to all of these folks, she was the most hawkish, or otherwise always low inflation, high interest rate member of the entire Federal Reserve. She was the most hawkish. She retired last year. And here's the quote from the
Let's take a look
article.
at that.
It says, for those reasons, George said she would find it hard to oppose a larger cut right now. You can make a very good case for 50 to say, just as we went quickly to raise rate above a neutral setting, we're now well above it, so we can take a couple bites at this apple. And that's a wow. That's from Esther George. It's not from somebody who was known to be a dove. So I think that the market is now, as a practical matter, almost 50-50 for a 50 basis point rate cut. And and I think that's part of the reason why the stock market is up, substantially. The bond markets are up. It's made the market really pretty comfortable, saying, whoa, could we see 50? And it's got to make you think, because the source of this material. So let's wait for the end of the day, and then I think the market will recalibrate perhaps on Monday. But it went from what we call a 10 or 15 delta to, I think, maybe a 30-35 delta. Now, I still think that the Fed ought to start with 25, because the message they send with 50 is to say, we were late, and why didn't we cut in July? And I don't think that's a message they want to send. Do 25, give a dovish directive, and move on. I think it'll be just as good, because I think 50 gives there's some sorts of risks in it.
Well, Tai, you brought up a lot of key points there, and usually here in the U.S. ahead of a Fed rate decision, Fed rate meeting, the officials go through a blackout period where they're not supposed to comment or do any media interviews. So it's very interesting that we're having former Fed officials, Dudley as well as Esther George, as you mentioned, Tai, commenting, and their comments have been affecting markets, as you mentioned, because waking up this morning and seeing this price action in terms of futures, the FX markets, as well as yields, it made you wonder what happened, what changed,
Right.
because we didn't have any economic data releases
That's
overnight.
Right. That's exactly right. And you bring up a good point. Bill Dudley, who's the former New York Fed governor. The New York Fed governor is very important. The New York Fed governor, the New York Fed president. So the governors always vote there, up to 7 of them, and there's a rotating 4 governors who vote. But the governor of the New York Fed, because they're so tied up to the financial markets, always votes. He's always a voter. And Bill Dudley there's a lot of respect for Bill Dudley, and Bill Dudley has been saying for a while that they should have cut in July, but it should be 50 basis points. So I think Nick did a really good job in terms of getting, really key people to speak. So it remains to be seen if if he's right, and if he is, I think his stock will will roof, because people will be following him around to see who he's talking to.
Yeah, and it's so interesting because Dudley was in Singapore speaking at the Bretton Woods Forum as he mentioned this, and for a blackout period you wouldn't expect to hear anything, but here we have former Fed officials speaking at conferences and speaking on record. So this is very, very interesting.
Exactly right.
Here.
He couldn't get anybody. He couldn't get anybody on the Fed right now, but he's sure got a lot of folks who were recently on the Fed.
And earlier this week we were talking about Boeing, right? And here we are on Friday morning, and we're seeing shares of Boeing lower, but not down significantly. Boeing's shares are off and have actually turned flat after opening on a lower note. So were you surprised by what you woke up to in terms of their strike?
So I was actually watching this late last night because I knew the machinists union was voting. I think there was a chance that they were going to strike, but I was stunned by the fact that 95% of the union voted to reject the offer, and the same amount of people basically voted to strike. That is an overwhelming majority. I mean, we're talking about 95%. That's like North Korean presidential, voting numbers, right? You don't get 95% voting for anything, which is kind of a little bit of a shock, in that this is something that the union bosses and union heads sort of agreed to. I mean, 4 years, 25% wage increase. That's pretty substantial. But I guess the undercurrent of this was they had been chafing under their previous agreement since 2014, where I think some people lost pensions, so they were looking for sort of, I hate to say payback, but they were looking for sort of compensation. And what they had started with is they wanted 4 years and a 40% wage increase, which is like sort of unheard of. I would love a 40% pay increase over the next 4 years. That would be quite lovely, actually. Thank you. But this, and it puts Boeing in a bit of a tough spot. I mean, the company is in as rough a situation as it has been in a long time. Yes. With your sort of scandal after scandal, the new CEO would love to say, let's just put this behind us. We'll refocus on quality. Let's get the brand name back. Now you have to deal with this. And in terms of if you have the previous strike was 50 days, and the market figures that the hit to revenue per day of a strike is $100 million. So if you have a 50-day strike, you're getting into $5 billion of a hit to revenue. Now, that is a hit to current year's revenue because you're not building anything and you're not making deliveries. I'm not an accountant, and I don't know exactly how Boeing recognizes revenue, whether it is when they actually deliver a plane, but that revenue, I guess, doesn't disappear, but it gets pushed into perhaps fiscal 2025. I don't know what their fiscal calendar year is, but it gets pushed later. And this year's financial results are going to be worse, which means borrowing costs based just on that may go up for Boeing. Whatever they need to borrow. So it's not good news for Boeing. And I think the only reason that they aren't down more, they were down 2.5% earlier on the open. The reason they've come back is actually Nick Timiraeus in the Wall Street Journal story on 50 basis points of Fed cut.
And before we move away from Boeing, the timing of this is very interesting as well, because we have to keep in mind that we're heading into the final weeks of the U.S. presidential election. So depending on how long this Boeing strike goes on, it could edge closer to that key November 5th date as well.
Yeah, I think a couple more thoughts here. And you bring up a good point in terms of, in terms of the calendar. When a possible externality of this, if this union gets a lot closer to what they want, is you see other unions, well, those folks got 4 years and 35%, whatever it is. Well, we want something similar to that. And now you're going to get, a wage sort of spiral, like, well, they got it, well, we want it too. And next thing, do we get government workers who want, they're probably not going to get that kind of raise, but nevertheless, the unions are going to be rested. And what Jay Powell has said over and over again is inflation expectations remain stable and low and fixed. If you start to move those inflation expectations, and we had consumer confidence today, right? And confidence was up, and inflation expectations were down just a little bit, right? That's good. But if you get a wage spiral and those expectations of inflation for businesses become unmoored, then now you're walking into a little bit of dangerous territory. Now, I don't think it's going to matter for the meeting next week, but you'd be starting to see the beginnings of something that could be troublesome in terms of inflation and wages.
And you just mentioned next week, and we're here on Friday morning, and we're seeing the major U.S. stock averages higher after this week's volatility. We saw not just in the Dow, but S&P 500, NASDAQ. We are on track for gains so far. So keeping that in mind, when we look ahead to next week, as we mentioned, we have that Fed Reserve rate decision, 2-day meeting starting on Tuesday, ending on Wednesday. We get Powell speaking, and of course we'll be paying attention to the economic projections. But in terms of economic data, we get retail sales next week, we get housing figures, and we have quadruple witching at the end of the week. So do you think we're heading into a week of more volatility?
I think it's pretty likely. Retail sales always important to get the sort of the pulse of the economy. I guess that's a coincident indicator, whereas employment is kind of a lagging indicator. If something goes bad, employers won't necessarily let go of folks until perhaps months later, because it's expensive to let people go and then eventually potentially to hire people. But you have retail sales, which shows you sort of what it was last month. Housing starts have been sort of up and down, but you can bet that if the Fed is really sort of fighting between 50 and 25, that they're going to be watching these indicators in the beginning of the week. Probably not Wednesday morning, but you can never rule it out. So I think it's going to be a very, very active week, because not only do we see whether it's 25 or 50 basis points, we see on the dot plot the projections of what the Fed members think is going to be unemployment for the end of the year, and how many cuts they have priced in for the rest of 2024. I think that'll be really important. So expect a very active week, perhaps more active than this week.
And of course, as we headed into 2024, there had been expectations of rate cuts, but we're here beginning of September, heading into that rate decision next week, and we might finally see some action from the Federal Reserve.
That's right.
So also, as we wrap up this week, I want to take a look at other markets as well. I want to look at precious metals, commodities, and the FX market. So we've been seeing a weaker dollar here, and that is as we're seeing rate expectations being amplified ahead of next week's Fed rate decision. But gold is also at new record highs as well. So tell us what's going on here.
What a week for precious metals. Gold really didn't have a trigger. It rallied to historic highs by itself, and it's rallying even further today. Now people are starting to bandy around. After we've been in a range without a new historic high for a few weeks, people are like, okay, maybe we've topped out a little bit, and now people are bandying around it. It's going to be 3,000. We're going back to 3,000. Now we probably get a little ahead of ourselves. This was platinum week this week, so and then also the gold dinner, I think was this week, or is it next week? But there's a fair amount of focus on gold, and there are strategists who are looking, bank strategists who are looking for 2750 by next year, which it seems like you could easily see after what we saw this year, depending on how the rest of the economy goes. A great week for silver, and as well as for platinum. And then palladium actually had a great week. It's back over 1,000, and now, I hate to put the word renaissance and palladium together, because palladium was traded 3,000 on the day that Russia invaded Ukraine. It had been trading above 2,000, and then dropped down to 850 in a big reversal. So, because it's used in carbon and ICE engines for normal gasoline cars, which will slowly decline in production. The outlook is clouded, but right now it had an amazing week, partly because one of the big North American palladium mines is cutting about half its production because they are losing $300 or $400 an ounce right now for what it costs them to take it out of the ground to where they can sell it in the market. So they really just had to cut back on losses. So a great week for precious metals. The dollar is near sort of the bottom of its range. I don't think it will collapse, but we'll have to see how we settle out the rest of the day and then early next week ahead of the Fed.
And of course, now that we've covered what we're seeing in commodities, I do want to briefly touch on Treasury. So interesting price action this week, and of course, we're keeping an eye on the yield curve as well. So what do you expect heading into next week?
So we had a 10-year auction on Wednesday that actually went pretty well. And 10 years is the benchmark that's become the benchmark Treasury over the past probably decade and a half or so. But then we had a 30-year auction yesterday, and that tailed 1.4 basis points. What that means is the auction went off 1.4 basis points worse than where the on-the-run 30-year bond was trading at the time. For a 30-year bond, that's fairly noticeable, and the non-bank bidders were a little bit soft. So what this suggests is that at the long end of the curve, as we mentioned, we talked about the curve disinverting in recent days. The long end of the curve, people are saying, well, you know what? Maybe we are, we have some concerns. The front end is dropping, and we're a little bit more worried about the long end now. And we need a little more risk premium to buy a 30-year bond. Okay. So, we'll watch the auctions as they came out, but that was suggestive, kind of a weak 30-year auction yesterday for sure.
Well, we'll keep an eye on what happens as we head into the weekend, Tai. But very quickly, I do want to take a look at what's moving the markets and, of course, the major stock averages. So I think it's a good time to talk about the latest earnings reports as well as price action that we're seeing across the board, and especially in terms of leaders as well as laggards right now. So why don't we start out with NVIDIA? So that had a volatile week this week as well on the heels of their latest earnings recently. So what do you make of what we're seeing when it comes to the Mag 7 names, and in particular NVIDIA?
So NVIDIA, and let's bring up graphic 1, because I wanted to just take a look at some of the things that we talked about. So that's NVIDIA on the NVIDIA chart on the left. They're both one-year charts. And then Broadcom, which we looked at last week and we talked about earlier this week as well. So they both had a great week. NVIDIA arguably led the rally at the back end of this week, and it's been up. It looks terrible when it's on the lows, but looks really awesome on the highs. So a good week for both of them. And Broadcom's a great company. As JD mentioned last week, it had sort of earnings that were just on expectations, and the market freaked out, and you saw the gap lower, but it's been up every day ever since. So we look at the charts. It's been a good week for both of them, but the range seems to be narrowing, and I think whether it stays in a range or breaks out on either side may depend on what we see next week from the Fed. The short-term outlook, I think, is going to be sideways. I don't think we're quite ready to break out, but you can see that that the range has been narrowing for both of these names.
And I do want to focus on JP Morgan now. And in New York morning trade, we're seeing shares of JPM down by 0.5 percentage point.
So we looked at banks, graphic 2 when we have a chance. We looked at Bank of America and JP Morgan, and here we are. JP Morgan had that big fall early in the week because they said net interest income is going to be down. Well, if we get a 50 basis point cut and people look like they're going to accelerate cuts, that NII, that income from interest expense is going to drop perhaps even a little bit more. And then, if I look at on the right, I actually have Boeing, and Boeing we've been looking at, and it's really quite remarkable where how well it's doing so far today. Let's see if it lasts, but I'm a little concerned right now at sort of 160. I'd like it closer down to that double bottom that you see on 120 on the right. Now, note this is a 5-year chart. The other charts have been a 1-year chart, but I wanted to take a step back to see the scale. I mean, I don't think you'll get to 120, but if we get a strike down or a little rout in that stock, there might be some value there because I think it does, as the primary airplane maker for the United States, it's not going to collapse. So the short-term outlook for both of them for the next week, I think JP Morgan will hold the trend line, that upward sloping trend line that we see. And I think that Boeing could have some exciting days ahead of it, and it's probably not going to be on the upside.
And very quickly, Tai, before we get to the half-hour mark here, I do want to take a look at Bitcoin and ETH. So we're here right before the 11:30 hour in New York morning trade. We are seeing Bitcoin as well as ETH both higher on the session, up by over 1%. Bitcoin up right around the 58,480 level, while ETH is straddling the 2370 level. So what's going on here, especially after the recent sell-off?
So let's look at graphic number 3. The Bitcoin chart is actually an interesting one, and our next guest, Zach Pandal, will probably have much more interesting things to say and go much farther in depth than I will. But on the left is the Bitcoin chart. And what troubles me, and again, this is a 1-year chart, from sort of the middle of the year, or maybe sort of the July-ish area, no, a little bit earlier, maybe May, June, you're seeing on a chart lower highs and lower lows. So that's why you see that somewhat downward sloping channel, and sort of, at least sort of traders, short-term traders certainly, get a little concerned about a pattern like this, because lower highs and lower lows suggest that we've seen the highs, and this trend, this downward trend is going to continue. So I expect that to continue unless we get a big asset rally. Really, a couple of days ago, we looked at the Bitcoin chart as next to the S&P 500, and essentially Bitcoin trades like a risk asset. So this is a downward sloping trend. We may get a rally in it, but in a downward trend, sometimes you want to sell the rallies and then buy them back, sell the rallies first and then buy them back on a dip. So that chart's a little troublesome. And then, no need to bring it back up, but Ethereum, which had a grand rally earlier this year because of the ETFs, has really given back a lot of those gains, and it looks a little soft, doesn't have a lot of energy. So I think we're not going to see as much action in Ethereum. It's still going to be Bitcoin.
And we're coming off the presidential debate here between the candidates, Harris and Trump, and we did not get any mention of crypto. And this is something that we briefly touched upon on the day right after the debate, that there was no mention of crypto. And of course, crypto community, they had been expecting some sort of comment, or at least hoping for that. So it's been very interesting to track the price action. And the thing is, you touched on this as well, it is a 24-hour market for crypto. So that is something that we can keep our eyes on as we head into the weekend. You can always,
if you're a market junkie, you can always watch that 24/7. And sometimes I do, just to see. Sometimes if you get a big move, and at sort of the end of at odd times, it may be liquidity driven, but it may tip you off that something important is happening.
And we have seen instances where there are market moving events on the weekend, so that is a very interesting sector to keep our eyes on. And our next guest, of course, will be joining us. So Tai, it was such a pleasure having you on. every day this week and to be able to talk to you as the market opened and unfolded. So have a great weekend.
Thank you so much. You too.
Thank you, Tai. That was Tai Wong, proprietary trader, for an extensive look at the markets. And coming up, joining us on Global Money Talk is Zach Pendle, head of research at Grayscale. We'll be right back. Don't go away.